The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you very much for being with me today. My name is John Needham. I'll be your host for today. In fact, I'm your host for almost every day, but it's grand to have you with us this evening. And we've got a whole lot of people here. Would somebody please just type in the question box that you can hear me all right? Here he is. Oh, Mike Kay over in New Zealand, my friend. Thank you, my boy. I hope you're all right. What a day we're going to have. Boy, talk about drama. Plus, I could have done 4 different tutorials today or 4 different webinars on the drama that's going around. Goodness me. August agony indeed, and maybe earlier than August. But I'll show you all of this as we go through. Well, and goodness, Janet Rivette's with us. Janet. After all these years, how wonderful to have you with us. Janet's one of the Danielcode stalwarts. She's been with us pretty much since the beginning and going on and on. How wonderful to see that you're with us, Janet. I hope your health's good. I hope you're happy and well, sweetheart. Lovely, lovely lady, great friend of mine. Okay, so we got lots of people in here today. Oh, goodness, we have got a lot. Chris is here with us, number of Chris's. Yes, 2 or 3, 4. George is with us. Greg, who's a retired wealth manager from Colorado Springs and now of Texas, is with us. Good on you, Greg. Good to see you, my friend. Ian, haven't seen you for a long time, my friend. The other Ian, Janet, we know is here. Is wonderful. Jeff, of course, important to have you with us. And Justin from the Hunter Valley, who does so much work for all of us, folks. Justin has done a ton of work for us. If you have a look at the website, you'll see there are 4 videos on the front of it, on the landing page, quite prominent. 2 and is it 2 and 3 or 2 and 4? Not quite sure, but 2 of them, I think it might be 2 and 4, been done by Justin. And the amount of research he's done on creating and trading Danielcode time signals is just incredible, extraordinary. He says he's back-tested over 100 years of data, with various periods of time on the markets that we cover. Some he's done for a year, some he's done for 6 years, 7 years. But in total, they've added up to much more than 100 years of work. He's a wonderful servant of you members, that he gives all this stuff so freely of himself, and a lovely, lovely guy. Okay, so glad to have you with us, of course, Justin. Who else? Oh, we've got Mal's with us. Another Mal, haven't heard of you before. Mal, welcome. Mark, of course, is with us, and Mark L is here, talking about people who've done so much work for you, the members. Mark L, have a look at video number 1 on the homepage. That's Mark's adventures and discoveries, I should say, in backtesting the Danielcode time trading strategies. All of those videos that run for about 30 minutes each, you should look at them. They're very, very important. Mike K, of course, we know is not here. Another Mike. Lots of Mike. Another good-o. And Mike Midsos in Chicago. There's a voice from the past. He's an old tutorial guy. Well, not an old guy. He's a vibrant, young, dynamic man, I'm sure, but it's some years since he did his tutorial. Glad to have you with us, Mike, indeed. Nathan, of course. Peter Mack, who's not a day trader, and all the other Peters. Sean down in Adelaide. Goodness me. We've got a good lot of people here today. Let's see, Toddy, of course. Toddy in Southern California. Glad to have you with us, Toddy. He's a tutorial guy. And, of course, Vicky's with us. And we don't have many ladies, so we would like to particularly welcome them when we do have them. And Vicky's a stalwart. She's been with the Danielcode for quite a while now. Okay, well, I don't know what you want to start talking about. It's a nice piece of drama going on in the upper echelons in the States, but we'll get to that very shortly. Remember, folks, that markets are rational, orderly, and sometimes predictable. And I'm going to show you one of those wonderful, wonderful predictions that I touched on at our last webinar. I'm going to show it to you in a little bit more depth now. And remember that survival requires strict adherence to the rules. And if you don't know the rules, you're in trouble. So I suggest you become familiar with them as soon as possible. Okay. Today's front page drama: Trump and Musk. What a business! Not unpredictable, is it? What's the kind of thing we can say? Very strong personalities, and no room for two alpha males in that little tightly ensconced corridor of power. The link at the top will tell you all about it. I'm sure they're updating it. It's zero hedge on it all. And basically, for those of you who don't follow American politics, Musk, as you know, is the richest man in the world. He's the SpaceX guy and Twitter, now X, and of course the car company Telstra's. Teslas, I should say. Telstra's a phone company. The Teslas, there we are, the electronic cars. Anyway, Musk has been a close confidant of Trump's during this last campaign, and he was actively campaigning for Trump, and he's put in over 250 million of his own money to support Trump and campaigning, particularly in Philadelphia, which was a blue state and now swung to being a red state. So Musk's basic situation has been that he's been very close personally with Trump during the election, and particularly afterwards. He was pretty much living down at Mar-a-Lago for months and months, getting tons of attention and praise. And then he took over the Doge efficiency audits of various American institutions, which were highly unpopular. But he's got two problems that have caused all of this. First of all, he claims that he's just found out that the BBB, or as Trump calls it, the Big Beautiful Bill, now officially called, can you believe it, the Big Beautiful Bill. I would have thought the House of Reps would have had a little more class than that, but there you are. And this is a massive taxing and spending bill. It's the highlight or the centerpiece of Trump's second term, and it's got over 1,000 pages in it. And of course, we've already had a number of House of Representatives where it's been passed just by the skinniest margin, because Republicans only have a very small margin. I think it's 3, maybe 4 seats over the Democrats in the House of Reps, which is the lower house in Congress. And a number of them have already owned up to say, well, I didn't read it. I didn't know that was in it. One of the things that's in it is that no state can make laws in regard to crypto for 10 years. And I think it was crypto, or was it AI? One of the two, anyway. I think it's crypto. And the lovely Marjorie said, "Oh well, I didn't even know about that. That's defeating states' rights, so I would have to vote against that if it comes back to the House, which it must." And the American system, the lower house passes it, then it goes to the upper house for review, and they make amendments, and then they get together and see if they can agree on a combined version. It doesn't really matter. One of the big things that Musk claims he's just found out, which is extraordinary considering, as I say, he's pretty much lived with Trump for months after the election result and in the time leading up to it. And he now claims that he wasn't aware that all of the money that the government has applied for incentives to buy electric vehicles is going to be no longer carried forward, not going to happen. And the Big Beautiful Bill is cutting that out. And Musk claims he just found out about that in the last few days, which is A, hard to believe, and B, if it's true, it's extraordinary. What was he doing with himself all those months down there? I suppose just having a good time. Anyway, so the BBB requires that Tesla loses its government incentives, which Trump says are in billions of dollars. And the other item that is not getting so much play, but I think it's probably equally important, is that Musk recommended a buddy, an entrepreneur, not two E's, that's my typo, I apologize, and a commercial astronaut. He went up in one of those interesting private flights that SpaceX put on. His name's Jared Isaacman. He's been the nominee for NASA administrator from December last year to May, pretty much right now. And all of a sudden, Trump dumped him, supposedly because he was a Democratic contributor. Of course, the real answer is much more complex than that. He was a personal friend of Musk's. He's the one Musk chose and recommended that Trump should be the administrator. And of course, Musk has had his own problems with personality clashes with other members of the Trump cabinet and senior staff, and that has been as much as problems with Susie, the chief of staff to Trump, and almost fisticuffs, certainly loud verbal arguments in the White House with Scott Bessent is his name, I think. He's the Treasurer of the United States. And I think there's a lot of jealousy among the various people against Musk. He's got a manner that grates a bit. He's being very assertive. And I think some of the people close to Trump have torpedoed his guy. But having his on-side administrator in NASA, of course, is vital to the future of SpaceX, which is, let's face it, that's the only way the Americans have of continuing to service the space station. The other contenders in the space race, including Bezos and that other guy, the pommy fella, have been hopeless, actually. But in this argument that's going on now, Trump threatened to cut all of Musk's subsidies. And Musk says, okay, I'll decommission the Dragon space vehicle starting now. Well, that's the only vehicle that the United States has that can access the space station. And there are people up on the space station, and they need to be serviced. They need food. They need supplies. They need to get home. They need lots of things happening. So you can see, you can read that article with a link I've put at the top for you at Zero Hedge. They're very good on up-to-date stuff. It's got very serious. In fact, it's got pretty nasty. Just to keep your mind on the fact that there seem to be problems elsewhere and everywhere, the capital Kiev, the capital of Ukraine, significant parts of it are reported to be burning after a very heavy Russian cruise missile strike, which I guess they will say is a retaliation for the strike on their nuclear air fleet, their big bombers. Wonderful story. Okay, so the BBB, the Big Beautiful Bill, is about tariffs, and it's becoming clear now this is not something that's just been thought of at the end of the day. This is obviously part of the planning that the Trump administration has been doing in the 4 years that they were waiting for Biden to be removed one way or the other. And the Congressional Budget Office, who are the people who give a supposedly independent view of legislation, they've said that the centerpiece, this BBB, which is a massive tax cuts, Trump's first term brought in some very significant Trump cuts, largely for the wealthiest people. And this second term, this new BBB takes those tax cuts even further. And the what Trump has said is that the CBO was run by Democrats, and they had failed to factor in the revenue that would be raised by his tariffs. So this is very important because the argument for increased spending, massively increased spending in the BBB, was partly on the basis that the funds that are going to be raised by his tariffs will be so enormous that effectively that spending will be neutral. And that, as he said, his regime of sweeping tariffs would deliver a tremendous support for Americans. And Scott Bessent, that's the treasurer, said, we keep hearing from the CBO there's going to be a large deficit from the bill, which we disagree with. But using the CBO scoring, they came out and scored the tariff revenue. We think it'll be the minimum of 2.8 trillion over the 10-year window, which actually puts the bill in surplus if you include the tariff revenue, which the CBO will not do. And they will not do it, of course, because there's no certainty about it. And what you do need to know is this gambit on tariffs, which I'm sure you're all aware of, has hit its first hurdle. And the first hurdle is that tariffs are a tax. There's no doubt about that. Tariffs have been around throughout the world, not just in the States, for ages, generations. And they've always been considered clearly to be a tax. So the problem for Trump with that is that the American Constitution reserves the right of taxation to Congress. So Congress is the lower house, the House of Representatives, and the upper house, the Senate, that combines to make the US Congress. And taxing powers are solely limited and vested in the legislature. And they, of course, can delegate it under certain circumstances. And the American political model rests on the basis there are three separate arms of government. There's the legislature, that's Congress. There's the courts, and that's where the how should we put it? That's where the conflict comes in, and you'll be aware there seems to be like an innumerable number of court cases going on about not only these tariffs, but some other things that Trump has been doing with immigration, where he's flexing his wings a bit to test the power. What did I say? It was AI, says Vicky. Oh, of course, thank you. Wonderful comment. Yes, that was the big thing. The states can't legislate on AI for 10 years. Thank you, Vicky. You're a wonderful little saver. Thank you. You've saved me that one. So anyway, bear in mind you've got the three branches of government. And each of them are jealous of, typically are jealous of their rights and their positions. And the third branch, of course, which is the executive, the president's group, the executive, are always pushing to see the extent of their power. And Trump in particular is taking it upon himself to simply cast his claims to presidential power without limit. And of course, then you've got the legislature, which is hopelessly stymied. The Democrats the Republicans, I should say, have a very small majority in the House of Representatives and about 4 or 5 majority, not huge, in the Senate. And they're not going to get anything through. The American Congress is threaded, loaded with people who have pretty strong opinions of themselves and their own views, and getting even the Republicans to agree with each other or the Democrats to agree with each other is not so easy by a long way. So you have your three separate sections, and each various leg of that, presidential or executive, Congress, and the courts, are jealous of their powers, and they're not going to let them go easily. In fact, there's tons of case law which says that Congress can't delegate its powers in a generalized manner. It can delegate those powers for a particular purpose or for a particular time. So you'll see that all of this various doctrines that the White House, Trump is relying on to support his power to create tariffs, which are taxed, is based on various times that the legislature has extended the power to create tariffs to the executive for a limited purpose or for a limited time. And the courts are starting to say now, I would have thought quite obviously, you don't have power to create these tariffs. And Trump and his boys are saying, well, we've got endless number of other ways we can do it. Well, all those endless number of ways are all going to run into the same problem in court. I'm a lawyer, a rather elderly lawyer now, and I haven't practiced the law for 20 years or more, but the basic philosophy of law is pretty much the same everywhere else, that courts are jealous of their privilege as the ruler, as the arbiter of the law, and they're not going to give that up easily. And I know that a lot of the commentary is based on judges that have been appointed by Democrats, etc., being hostile, etc., which is true to a basis, but only to a basis. The vast majority of judicial officers, judges, take their responsibility very seriously. And, of course, the ultimate arbiter, of course, is going to be the Supreme Court, where Trump has had the privilege of appointing 3 new judges in his first term. And Trump has the view that because he appointed them, they should be loyal to him and agree with pretty well anything that he wants. And I can tell you that's not going to happen. I think right now on the question of tariffs, I think he would be lucky to get 1, maybe 2 at a stretch of the Supreme Court judges to agree with his arguments. I think likely none of them, but I wouldn't put any higher than 2, which isn't going to do the job. So there we are. That's where that particular argument sits at the moment. And here we are. Move on. Same thing I've been talking to you about. CBO says the debt to GDP ratio will hit 130% under current law, and the big beautiful bill will push this substantially higher. And Musk has come out and said it will burden American citizens with crushingly unsustainable debt. And that's correct. The American debt load is just, if it's not out of control, it's pretty close to out of control. And this rhetoric that tariffs are going to overcome all of this additional cost. Well, as this article said, no serious forecaster believes the growth dividend from Trump's pro-business policies will be sufficient to make a meaningful difference in clawing back the deficit blowout. So I think he's between a rock and a hard place on this issue. The next issue is, of course, don't forget that Elon Musk is got a taste of politics. He loved campaigning for Trump, and he's now put up his little note on X, the old Twitter. Here it is. Is it time to create a new political party in America that actually represents the 80% in the middle? And there's almost 400,000 votes in. This was some time ago. And 84% of the population said yes. Now, these would be people who were closely associated with X, or Twitter as it was, and they would have fairly biased views. It doesn't mean that's a fair sample by any means, but you can see the situation that Musk goes ahead and starts another political party. And this is all hugely damaging. And I had some time cycles, which I'm going to show you later, that suggest that August this year could be a time of considerable angst and agony And I think this just plays into that scenario. All of this stuff takes time to work out. All of the court cases takes time to work, to work themselves through the courts, then the appeals, etc., etc. So I don't think it's anything too sudden, but you can see that this particular issue of a personal and nasty blow-up between the richest man in the world and the most powerful man in the world has got real problems for both of them. They're very substantial repercussions from all of this. So, and now, of course, it's getting a bit nasty. Those of you who follow American politics, as I do, would have been bemused and wondering what we were seeing Kash Patel, the new director of the FBI, and is it Don or Dan Bongiorno, the new deputy director of the FBI, who used to be a bit of a rabble-rouser on his radio shows, going to such lengths to say, you saw all this last week, maybe even the beginning of this week, that they'd examined the evidence of Epstein's death closely. And they've now come to the absolute unconditional view that, yes, it was suicide. Well, Bongiorno, as one, has been one of the main purveyors of saying, well, that's not true, it's conspiracy theory. So he's had a change of tune. The question is, why would it matter? And at the time, it seemed to me quite incongruous that anyone's going back and beating the drum about Epstein and the Epstein files again. But you can see this is the post from Musk. Donald Trump is in the Epstein files. That's the real reason they have not been made public. And then he went on to say, mark this post for the future, the truth will come out. And if there's any truth in that, and you have to think about the benefit of the doubt, because this was a guy who wasn't aware that he was about to lose one of his main sources of livelihood with the incentives for electric cars being cut off. And if he wasn't aware of that, you wonder how thorough he's been with everything else. Anyway, it's a damning accusation. It's one that was sure to be run in the media for days and days and days, and it is damning. So there's how the thing gets nasty. Okay, back in the trading world, this is the front page of the Danielcode website. Video 1, as I've said, from Mark L. Video 2 and 4 are both from Justin from the Hunter Valley in Australia's New South Wales. That's the Australian equivalent, if you like, to Queensland. Beautiful country, grass is so green you could eat it yourself, and that's where most of the big horse studs are, as you can imagine. And video number 3 is from Amy, who had never seen a trading chart until she came and did the Danielcode tutorial. And now she's very, very good at it. So moving on, these are something you're going to be talking a lot more about, the Danielcode proprietary trading channels. They're so important, and there are a number of different uses for them, but it's a proprietary tool, and it has two main and alternate methods of operation. Using it in its tightest form, it is a wonderful tool for determining trend, and it determines trend faster than any other method that I have seen. That's its fast speed operation. On a slower basis, it is the defining trading channel for all markets. And I'm going to show you that in a slightly disjointed way today. But when you see these channels, think about them, because they are absolutely extraordinary. We're also going to be talking a little bit more about UST bonds because they're at a point of quite critical situation, which I'm not sure everyone is aware of at the moment. So let's talk about US T-bonds and the big beautiful bill. So some of this you've seen from the last webinar, but I needed to show you as we move forward. This is our long-term trend chart for US T-bonds, the futures, the ZB or ZB, you would say, contract. And a couple of things important to note. You can see on the left-hand side, I've put a little blue oval there to show you that massive, massive gap down. And that was Paul Volcker, then governor of the, then treasurer, actually. He had been governor of the Fed years before. And America was stuck, this is 1999, in a really bad inflationary cycle. They pumped interest rates up. I think the comment was 12%, and that hadn't done the job. So this gap you can see here is Volcker surprising the market by saying interest rates are now 20%. And a few days later, he took it to 22%. And of course, that historic gap is sitting there. It's been filled. It's not a hanging gap. It's not a Chad or one of those versions, but the market has memory. I've talked to you recently about how the market can remember things from years and years, in this case, from decades ahead. So if you look at the red line that runs diagonally through this chart, that's the center of the Danielcode trading channel. And it normally is in blue, and it has a thin line above it and a thin line below it, both parallel. And you can expand those because that is one non-standard deviation from the mean. By that I mean a normal standard deviation is 1. That's the mathematical term for a standard deviation. For us, it's not. We use an extension of the Danielcode ratios, which is essentially saying to the tool, put one trading period above and another the same trading period below the median. What's really interesting here and should interest you is you can see that we stopped moving that red line sometime in 2016. And I stopped moving it because if you look at not the final high, but the high before the high, you can see that it caught that high perfectly on a two-channel basis. In other words, not one channel, but the second channel. You can expand these channels numerically. They're all equal. And those of you who have done a bit of trading may come across some of the work of the famous W.D. Gann, William Delano Gann, who was a Texas boy who became a very successful broker in Chicago and teacher of trading. And he was very keen on talking about the high before the high and the low before the low. And the real significance of the high before the high and the low before the low is that those are absolutely wonderful places to start counting your time cycles from. And in many respects, they're more important than the absolute high or absolute low that may follow them. In this case, I stopped moving this channel way back in 2016 because it had defined that high there so perfectly. And it happened on a 59-day cycle, of course, and that gave us a pretty substantial correction. In fact, the correction actually went from two non-standard deviations above the mean to two non-standard deviations below the mean, and it did it exactly, and that's pretty clever, I'll tell you. And the market then went on to rally higher, and then it started its run down after March 2020. All of which we have been commenting on over the years. And as Greg will tell you, who had substantial business in bonds in his wealth management business, you'd have been better off listening to Danielcode than anyone else. And it's been a long time, and it still is precarious. And we're not actually at the low now. We're off the low, but we're off the low sitting exactly on that dotted red line you can see, which is where we got to Friday before last. Let's move on. This is a closer look at it. This was the chart from your previous webinar. It's moved on a bit since then. It's rallied. And there was that rundown on the Friday, almost exactly into this dotted red line. And that particular tranche was created in November 2016 when I stopped moving the Danielcode trading channel. But this is 6 standard deviations, or 6 non-standard deviations, I should say, 6 Danielcode deviations from the mean. Perfect. So how can we have a market now, 10, 12 days ago, finding the low that was forecast from November 2016? How is it possible? How could the market remember that? More importantly, how could it remember the gap way back in 1999? But the reality is it does. And I'm going to show you more of that. This is our 6-day chart of UST bonds to give you an overall look at it. It's been managing its Danielcode numbers very, very nicely. That recent low came in with just a 3-tick variance from its blue line to 110.04. And you can see even today, the close of that 6-day channel is almost exactly on the red line at 113.13. So this is what I showed you last time, and it says, be afraid, be very afraid. The bond market is the supremo in trading. And it's often held that bond market is run by the smartest people in the world and the most serious people in the world. And its power is immense. It's probably one of the biggest single market, might be the biggest single market in the world. And it's the tool that the US government uses to fund its expenditure and its deficits. And if people decide that there's too much risk there, that means interest rates go up. And it's vital, of course, to have foreign countries buying this debt. And Japan and China are huge owners of UST bonds. And the relationships between these countries all go much to the same issue. So this high in where Volcker acted, late 99, we're roaring up. This is the .com bubble, which topped out in 2000. And lots of enthusiasm. It was all about eyeballs back in the days, for those of you who remember. And today we've got a similar manic market, in my view, but now it's all about AI, which is the latest and greatest narrative for big tech stocks. So have a look at what happens here. The low in the bar before the disastrous gap down with Volcker's announcement, that low is at 110 caret 12. That little arrowhead you see is called a caret. And look what happens here at our low Friday last week, 110 caret 01. So you've got vastly different economic situations at the moment, although you've got similarities in the .com bubble and the AI, I dare not say bubble, let me say enthusiasm, if you like. And the market knows that number. That's why it's gone to within 11 ticks of it 25 years later. Extraordinary, isn't it? You should think it is. And that support there, of course, was miraculously reinforced because the very next day, the Monday, the PPT, the plunge protection team, jumped in and started buying T-bonds, which has lifted it up considerably since then, but I suspect not enough. These are, as I always show you, our trades for the week, some of them. I think this is pretty much all of the futures, except for crude oil, which is fairly stagnant around where it is. This is the S&P daily. We had a TO3 sell signal yesterday to be executed today, and we've got a nice little down bar here, We had perfect target recognition, as you can see, on the Wednesday, which is what triggered the TO3 sell signal. And I suspect it's going to be more important to be short as the day goes on. Tesla's down about 17, 18% at the moment, and that will be infectious. This is UST bonds. It's a little bit out of sequence, this one, folks, but I wanted to show you this. This is the 24-day chart. Have a look at this massive rundown since 2020. All of it, without exception, has happened within the Danielcode trading channel. I'm not suggesting you could have traded this. You could have if you wanted to, but the risk on trading this time period is not for us. But look how perfectly that channel defined, including where it ends exactly to the 1 bar period by our proprietary Danielcode trading channel. I think if you think about this tool in connection with what I've been talking to you about lately, which is the beyond Danielcode momentum bars and the capacity to stay out of markets that are not going anywhere and save yourself those losses. I think this is tremendously important. And in fact, it's so important, I'm going to do a special webinar next week. It won't be live. I'll do it privately, but it'll be posted for you, and you'll get a letter telling you that it's available. And that's going to become lesson 6 of the TTT series, how to build this tool, the different ways to use it, how to use it, and what it's telling you. And I think it's absolutely extraordinary. Back to the dailies. This is the S&P daily. I think I've already shown you this chart. I have with a TO3 sell signal. Here's the next one I was looking for. It's the same chart, but it's got the Danielcode trading channel on it. And you look at today's low. We had a sell signal yesterday, which was triggered today. Has there been a change of trend? Well, on this chart, not so far. These Danielcode trading channels work on the close, and a close outside that channel will tell you there's a probable change of trend. And it works exactly the same on daily bars, on 5-minute bars, if you like. I've even traded on 3-minute bars back in the day when I was a wild man. And the close of this particular tool will show you the probable change of trend faster than any other methods that I know of or have ever seen to determine trend. And that's pretty important for your trading, folks. So you can see nice sell elected here. We're short, and there's a little bit of money in it, not much. There'll be more by this time tomorrow. And look at the close. It's closed inside the trading channel. So for your medium-term trading, it's saying that change has not occurred yet. This is gold. We had a TO3 sell signal yesterday, which was elected today. Hasn't gone very far so far. Gold's been incredibly buoyant, hasn't it? This is the same chart, and it's now got the Danielcode trade channel on it. And you can see same thing. Look where today's close went, exactly to the lower one of those Danielcode trading channel lines of support. Upward facing channel. The bottom line, of course, is support. The upper line is a form of resistance. And you can refine that more. This is our copper chart. It's been running on our TO3 buy signal for 1, 2, 3, 4, 5 days. Looked pretty exciting up near the 505 line, didn't it? But it's run all the way back. The 505.85 line is the Danielcode black line, the famous Danielcode black line. That has the same qualities as the other lines. It gives you support and resistance, but more importantly for the black line, it's the last level of support or resistance for any market, and the market literally can't go further unless you can get a daily close above that black line. So it doesn't matter so much on the daily charts, but it can be a massive mover on the longer term charts. Some of you remember back a few years ago when gold was making a new all-time high that we had the black chart that stopped that run up, and it was gave us completely the end of that rally and it was a $28,000 trade a week or so later. Very important, the Danielcode black line chart. See where it is and what it's telling you. This is the NASDAQ. Take note that you had a TO3 sell signal yesterday, but the close of that bar was below the black line of the rally, which was at 21772, just below that. That's pretty typical, and the market can't expand further to the upside unless we can get a daily close above that number, which we didn't get. So today's result was pretty much inevitable, which is why we had a TO3 sell signal for this as well. And this is the Russell, same thing. Key reversal bar at its black line of 2120 and a TO3 plus sell signal. Got elected today, not much movement, pretty much closed where it opened, plus a few dollars. Here's our trade in beans, which we've been on a buy signal here for the last 3 days, and it's moved along quite nicely. See how precisely this market is hitting on its red lines. Today's high at the 1056 line, yesterday's high at the 1053 line, just a handful of ticks difference. Markets know and understand these Danielcode numbers. Here's silver, which was a biggie. Remember about correlations. I talk to you all the time about correlations. Silver and gold are so highly correlated that a signal in one can be executed in any other. And there was a correlated TO3 buy signal for gold, or you could have elected it in silver, and if you had, you'd be up 11,600 in 2 days into today's close. Here's that same UST bonds chart, but it's now got the Danielcode trading channel on it. We had a TO3 buy signal from the inside bar, little reversal there, and in fact, that was the key reversal bar. That didn't go anywhere, followed by an inside bar. That set up the TO3 buy signal. You can see the low of that inside bar is right at the Danielcode support number. Perfect target recognition is the first thing you need to set up a reversal signal in price or indeed in time. And we've been long this market for 2 days, and we got a sell-off today. It's pulled back quite considerably. Let's see what else we've got for you. All of these members charts, if you go to the home page, you look at this gold writing along the bottom of it underneath where we post the Flip Me and the trade charts, Tradecraft charts. You'll see it says chart archives. And in there, there's about a bit more, I think, now than 40,000 members charts that I've created since this website went public in late 2007. They're all done by hand. They're all done by me. And to say that it is work intensive is probably the understatement of the week, and it takes forever, but I'm happy to do it. I'd be even happier if I thought more of you were using these charts and using these Danielcode numbers, and you should be, because markets find it very hard to turn without Danielcode target recognition. And that's why we save, create, and publish the Danielcode charts. So if you haven't already got the message, folks, you can teach yourself to trade. We have 2 entirely separate schools now. One is the TTT, or the Teach Yourself to Trade video series. You just buy that, you own it, you can look at it, review it as often as you like, and any time you like. And the other one's the intensive one-on-one tutorial, same material, but it's all done one-on-one with me, and its details are in the attachment I sent you and also at the website. The fourth seal is becoming more and more important. And as the various things, no doubt they cause you confusion over the years, but it's quite simple. The first degree or seal, I call them a seal, you can just call them first degree if you like, is price, and the second degree is time. The third degree is volume, which used to be vital to us as a confirming indicator. And the question of volume now has got so murky with the private pools that the authorities have allowed over time, and allowing more and more, I might say, mean that volume is no longer reliable on a timely basis, and we just don't use it. The fourth degree is an angle. The fifth degree is a different angle. The sixth degree are the beyond masterclass momentum bars. Very important. The seventh degree, I haven't told you about yet, but we take the time ratios from the Danielcode and we simply call them price targets without any adjustment. Now think about that. Your time ratios are vertical, they're moving across the page. Your time targets are horizontal, they're moving up and down the page. But we take exactly the ratios that created from Daniel's code and we say, let's call them price. We know that they work as time. Let's see now if they work as price. And as I've said, there are over 40,000 charts under our member chart archives that show you how they work, and they work very, very well. So we've refined this teaching process so much that I'm now almost happy with our TTT, Teach Yourself to Trade series, which is I think probably 90% there. And what I'm saying at the moment is I'm happy to add on one or more private tutorial sessions with me if you've done the TTT course, just to make sure that everything's slotted in, to make sure that you put all the dots in the right places and that you're now capable of using these wonderful Danielcode trading tools to their absolute maximum. My interests are identical to yours. I want you to be a super trader. And if I can help you get there, either with the one-on-one Danielcode masterclass or the video series we call the TTT, or Teach Yourself to Trade. This is a note, again, you've seen it on lesson 5 for those of you that are new. What we're finding is that markets will not move without Danielcode momentum bars, which come from the Beyond Masterclass study. And you can see in this market that's got quite a lot of vertical up and down movement, you can see the 3 spots where you didn't have momentum bars. And essentially, they've consolidated. Now, I know we only think of consolidation as being vertical, and 2 of these are consolidations on an angle. One of them is on a pretty steep angle, but they have that same characteristic that they don't give you a profitable exit where one would have expected it. And if you can avoid those periods of time, you maximize your profit. It's amazing. And don't forget, losses, you should count them as double, because if you lose 20% of your bank, you got to make 40% just to get back to where you were. So avoiding losses is as important in trading as finding and knowing about the winners. This is a note on our masterclass tutorial, which you've seen before. It's wonderful. It's a definitive course of trading markets that covers everything you need to know, quite literally. And a lot of our good traders are with us today, guys who've done that course and understand how beneficial it's been. So that's 6 or 7 daily sessions with me, an hour and a half each per session, hour to an hour and a half, and this will make you a super trader. Alternately, we've introduced the TTT, or Teach Yourself to Trade video series, because I was recognized that I needed to bring out a product that was much cheaper. It's expensive. Everything to do with trading is expensive, isn't it? But this TTT is less than 50% of the cost of the one-on-one tutorial with me, and you can do it in stages. You've got the 5 different lessons, soon to be 6, because the next lesson is going to be creating and using the Danielcode trading channel, and you'll see all of that next week. But you can go through the TTT series at your own speed. You can buy lesson 1, then lesson 2 when it suits you, or you might just buy the whole lot and get trading. Anyway, I'm happy for it. Now, what's going to happen in August? Well, until the COVID flash crash in 2020, all of our Danielcode time cycles had started from before the dot-com high, long before the dot-com high in 2000, then the dot-com high, then the momentum low after the dot-com high, which is not the same as the chart low, then the 2007 high, the closing high of that monster rally, into the March 2009 crash low we had. They've been the beacons, the bulwarks, if you like, from which all time has been counted. And I've been saying for a while that the COVID flash crash, which was dramatic at the time, in March 2020, and the sort of the mini one before that in October 2018, I have been sure that the COVID flash crash itself, and not only the previous pullback, but there's an echo of it, an earlier echo of that, were going to become the bulwarks for time. They were going to become so important that we would be measuring time from those levels. Well, that's why this is important. This is a chart of the S&P futures contract. This is a 24-day chart, and you can see it starts on the COVID flash crash, the March 2020 bar there, big outside bar, and it runs through the Danielcode time cycles: 14, 29, 37, 44, 50, 59, 62, 74, and 89 are off the page. But at the 59, that comes in August, the end of August 2025 on the 24-day chart. And that's pretty significant for another reason. First of all, 59 is the dominant cycle that we've been finding. All the big important highs and lows have come in at that cycle. Here's the next chart, which shows you the same thing, but it shows you even the same cycle, but it's now not starting at the COVID flash crash high. It's starting at the October 2018, the first of the little mirror pullbacks that happened. It was quite significant at the time. It looks to be a nothing now, I know. That was that pullback that came before the March 2020 flash crash. So one of these time counts started, the one I just showed you started from March the 20th, the COVID high, and low on the same bar. This one starts from October the 20th, which you can see looking at this chart, is 14 days from the closing high of the next rally into the COVID period. Okay, and if you take the time cycle from this, you can see that the 74, the next cycle out after the 62, is also on August the 29th. So coincidences don't happen. So we put them both on the same chart so you can understand them. That to me looks pretty powerful as something important is going to happen. At this stage, we think it's going to be, I think it's going to be a high. You should also read Frank DB's wonderful, wonderful commentary on the fourth seal to see what he says. But I think you should mark your books that something in late August is going to be very important. At this stage, I think it's going to be a high. These cycles can invert. It could equally be a low. But all of these troubles that I've talked about earlier and many, many more take time to work out. These court cases take time to work out. And it will be really interesting. So keep that in mind. You've got two dominant Danielcode time cycles running from the COVID crash flash high and the echo pullback before it, both giving you the same time cycle. And generally, that's important. This is the S&P index, folks, not the futures. This is the cash index. And if you want to know if this stuff works, I've just put a straight Danielcode cycle on the low of the COVID flash crash. The ones you've looked at before have been looking at the highs. This is the low of that cycle, and the 50, which of course is a highly dominant cycle, that gives you the closing high. in January 2025. Pretty impressive, isn't it? I think it is. Bear that in mind. It's all good future knowledge. This is the, excuse me, I'll let you read through this. This is the COVID, the fourth seal, I should say, from Frank DB for the S&P this week. We have Frank's commentary and charts for S&P, gold, and crude oil. They're all valuable. You can subscribe to them for not a lot of money, and I suggest that you should do that. Okay, this is the Forex week. Well, we've had our usual number of winning trades in Forex. I haven't put them in because I want to show you something different. What I want to show you is why these markets are consolidating, because there's no momentum bar in the shaded area. It looks like it is. You think you can find it in the command bar. You can't unless you've got the tool, which I provide you. There is no momentum bar in that shaded area. And when there is no momentum bar, markets consolidate. Markets can't move in a trending fashion unless they've got the Beyond Masterclass trend momentum bars in them. And here's an example. Here's the next example, same thing. This is the Canadian Chief Pair. Exactly the same thing. If you had a few losing trades over the last 8 or 9 days, that's why there's no momentum bar there. It can't move. It's pinned. Here's the dollar yen. Had a lovely rundown, absolutely perfectly measured by the Danielcode trading channel, the Beyond Masterclass sell signals, etc., etc. So what's been happening for the last 6 or 7 days? Nothing. Why? No momentum bar. Markets can't move significantly without a Beyond Masterclass momentum bar, which is why it's so important that you learn this stuff, folks. So important you take the TTT courses and learn this stuff. Thank you for bearing with me. If you haven't already, please help yourself to a free trial. Go to the website, follow the free trial button, just click on it, says free trials at the homepage, and follow the links. Any problems, contact Terry at support@thedanielcode.com and he will assist you. Finally, this is our disclosure statement. I always ask you to take this very seriously. As I've said, you wouldn't dream of getting in a car when you didn't know how to drive and trying to drive it. You'd have a crash. You'd kill yourself and probably others. Trading is the same. If you don't know what you're doing, it's very, very dangerous. You will lose your money. Once you know what you're doing, the good news is you will make a lot of money. It's equally easy to make money. But you must know what you're doing. The best way to do that is get yourself through the Danielcode trading course, and you'll be on your way to being a super trader. Okay, so next week, folks, another webinar which I'll send you. I'll post it and I'll send you a letter telling you about it. It's going to be all about how to trade using the Danielcode trading channel. In one form, it's going to show you the quickest trend changes you've ever thought of. In the other form, it's going to allow you to trade a longer, a little bit more relaxed style of trading and get all those big long runs that come from the On Masterclass courses. So thank you for being with me today. It's been wonderful to have you here. We're a few minutes over time, nothing too dramatic, and just great to have had your company. Thank you so much. Jeff enjoyed that. Good, Jeff. I'm glad you enjoyed it. What's Mike Kay say? You're saying that you're sounding great, John. Hope the GC is staying warm for you this winter. Hey, mate, get over here. It's fantastic. First day of winter here on Saturday. We've had 2 coolish mornings, minimum 9 degrees. You'd laugh at that. That's the maximum for you on a good day. But it's wonderful. Adrian L., of course, he's doing a tutorial now. As well, thank you. He enjoyed it. Glad to have you with us, guys, and enjoy your weekend, folks. It's the end of the week for me. My orders are on, and I'm going to look forward to some drama, and I hope you will too. Drama is the lifeblood of volatility, which is what we harness at the Danielcode. So that's it. Bye-bye for now. Mal, thank you. Thank you for posting, Mal, and thank you for being with us. I hope you enjoyed it. There's much more to learn, folks. Incidentally, you realise that there's well over 100 Danielcode webinar videos on YouTube. Just search Danielcode under YouTube. You'll find endless videos. As I say, over 100, maybe more, and all of them will teach you something about trading, some little thing. When you want to learn the lot, let me know. I'll be more than happy to teach you and show you the magic and mysteries of Danielcode. And bless you, Janet. It was wonderful to see you still with us and still well. Take care, folks. That's it for today. Bye-bye for now.